All right. Good morning, everybody. Good morning, all you magnificent melon heads. Happy Monday, everybody. Today's April 21st, 2025, and we are off to another week and all the good and the bad that may come along with it. First things first, the Pope has passed away. That story just broke this morning, so we will be playing the big game of guess the color of the smoke in the Vatican, and all that will be going on. So that's happening in the world today. Probably not a market-moving event, but a historically significant event nonetheless. Now, back on the subject of finance and what is happening in that world today, a big story this morning is the U.S. dollar. And Brent Johnson is probably having a fit this morning because the DXY is heading sharply lower here. The world appears to be de-dollarizing. Well, let's just say the world is de-dollarizing right now. It is happening. We are seeing people leave the dollar and go to other places. We'll talk about where it's going for the time being. Now, this is a pretty strong reaction we're having. We've seen the DXY, the US dollar index, go from about 110 a few months ago down to the low 98s this morning. Significant move in the world's reserve currency. Now, the one caveat, we're going to talk all about the weaker dollar today. There's one thing I want to throw out there with you because we got to throw a bone to Brent Johnson here. Remember, the world's reserve currency is the dollar. Everybody holds dollars and everybody owes dollars. That's an important one. Remember the dollars that are owed. Because historically, where do people get their dollars from? They get it from global trade. Say you're a Chinese bank and you owe dollars because you issued dollar-denominated bonds to go build some stupid development where you skimped on the rebar and now the buildings are collapsed and nobody wants to own it anymore. You owe dollars on those things. You've got to get dollars to pay those dollars back. Well, historically, you get them in the form of global trade. Without that global trade, where are you going to get those dollars? Well, eventually, you're going to have to go onto the Forex market and buy them. So while we're talking about how much weaker the dollar is right now, and it is a lot weaker, and it's probably going to keep getting weaker, keep in mind there is a risk that this slowdown in global trade actually results in a dollar shortage that causes people to start outbidding each other for those dollars that are now getting more rare. And a deleveraging means fewer dollars in circulation. We could actually see a sudden violent strengthening in the dollar eventually. But that it sure as heck ain't happening this morning. This morning, we have got the yen is way stronger. USD JPY was under 141 for most of the night. Watch that yen carry trade, guys. That is a big one, an existential risk to markets. It's out there. We are now well below the lows of that August 5th panic. And the euro is strengthening rapidly this morning as well. Money is leaving the States and it's heading to Japan and it's heading back to Europe. By the way, Eurodollar University has done some fantastic videos over the last couple of days about Europe and Japan. Jeff Snyder really knows his stuff, and he has done some pretty good content about what's going on in those Forex markets. Highly recommend that channel. Shout out to Jeff. Be sure and tell him nobody sent you if you go visit him. Now, the other place gold or money is going this morning, leaving the dollar, it's going to gold. Another all-time high. Gold has not made an all-time high since yesterday, 2 days ago, the day before that. Who knows? Seemingly daily all-time highs for gold now above $3,400 an ounce. And I got to take another cheap shot at myself, guys. I said gold was going to hang out at 3,000 for a while because of the importance of that psychological barrier. How's that working out for you, Jack? Gold blew right through 3,000, 31, 32, 3,300, and now 3,400. What did we spend? 3 days, maybe 4 days in the 33s before we touch 34? Where's gold going to stop? I don't know, but it's time to start raising your price targets there, analysts who called it a pet rock for the last 30 years. All of a sudden now they're like, oh, 4,000 gold seems viable to me. After mocking people who held gold for years, now people can't get enough of it. And even the president took to Truth Social on Easter and made some peculiar comments about gold last night. We'll take a look at what he had to say and maybe try to take some guesses at what he was really hinting at. Maybe that's contributing to the move in gold. And very interesting this morning, we've got stocks are down. It is generally a risk-off sentiment prevailing in markets this morning, but Bitcoin is up sharply. Pay attention to that. That is interesting, guys. I know we got a lot of Bitcoin critics that follow the channel here. I know we got a lot of Bitcoin fans that follow the channel here, right? I own Bitcoin. I'm not like a Bitcoin maxi or anything like that. I don't own altcoins or anything. I'm not pumping any of that garbage. But Bitcoin is interesting. Now, I've been saying for a while here on this channel that the dollar status as reserve currency wasn't as at risk as people think. Like, it took a lot of heat from the BRICS guys. And I'm saying, look, guys, BRICS is nowhere near creating their own currency. It was like 2 years ago. There was supposed to be this big announcement in August, and everybody was pumping their chest. BRICS is going to dethrone the dollar. No way. Never happened. 2 years later, still hasn't happened. The only thing that's ever really threatened to take any significant market share from the U.S. dollar as a global reserve currency has been Bitcoin. Now, I don't think Bitcoin is going to become the world's reserve currency. No, I don't think that's happening. I'm just talking about the qualities that make something a viable reserve. Bitcoin is the only thing that comes closer than any other global currencies do. And we're seeing Bitcoin actually perform pretty well this morning at a time when Bitcoin should be selling off along with tech stocks, because I would typically lump Bitcoin in as one of those highly leveraged, risky bets. But it's not. It's up this morning. It's up in conditions that might otherwise be considered a flight to safety. Now, what is not performing its traditional flight to safety role this morning? U.S. Treasuries. So take a step back. Has Bitcoin not displaced U.S. Treasuries and the U.S. dollar as one potential place where people go for safe havens? I know Bitcoin is not a safe haven asset. I'm not saying Bitcoin is a safe haven asset. Right? Bitcoin still remains a very risky investment. But look at what's going on here this morning, guys. Bitcoin should be selling off. And there probably are a lot of people unwinding yen carry trades right now who borrowed to buy Bitcoin. But whoever is buying, the people leaving the dollar, is enough to overwhelm that forced selling, and Bitcoin is sharply higher here. Pay attention to this move that's going on. Bitcoin winter is still just around the corner, guys. Sometime between now and October, somebody big is going to blow up. My money's on MicroStrategy, but I don't know who it's going to be. But sometime between now and October, we will enter Bitcoin winter. It's going to be brutal. Once again, it always is. This won't be the first time. It won't be the last. A lot of people are going to blow up. I see the fraud getting worse and worse in the crypto space. The altcoin pumpers and the pump and dumps are just running rampant. It's the Wild West. But man, I just can't ignore what I see in Bitcoin this morning. Pay attention to that one. Also going on this morning, China threatens to retaliate against anybody cutting a deal with the United States that is perceived to be at China's expense. So we got a little bit of bluster from the Chinese to go along with a bit of bluster from the United States. And so battle lines being drawn once again in the trade war. Huawei is getting ready to begin mass shipments of their new 910C GPU, just as NVIDIA is banned from selling their H20 GPU. So congratulations to Huawei. I hope your reverse engineered chips sell really well. Also going on this morning, Tesla is reported to be delaying the Model Y affordable EV. That is according to people familiar with the matter. You got to put that asterisk next to any of those stories these days. But supposedly it is 3 people familiar with the matter. So you got an anonymously sourced article about Tesla's cheap EV that they were supposed to be rolling out very soon here might be delayed. And I can't help but think it's got to be trade war related. It's got to be tariff related. Now, Tesla is one of the most American companies, right? If you look at companies that source the most of their car within the United States, Tesla is head and shoulders above the rest. A Tesla made in America is the most American car you can possibly get. That being said, nothing is purely American. Everybody gets some part or some piece of something from some other country, gets shipped here, and then installed on an American factory. So I can't help but wonder, is this the trade war? Is this the tariffs potentially impacting Tesla's affordable vehicle? We'll probably get a lot more information about that tomorrow when Tesla reports their earnings. And another one to keep an eye on, Yale is dumping $6 billion worth of their private equity holdings from the university endowment. We've been talking a lot on this channel over the last year or so about this game of the floor is price discovery, about how private equity firms have been jumping through hoops, creating new funds and using the proceeds of those funds to pay out fake profits on their old funds, which is almost exactly what a Ponzi scheme is, by the way. Private equity has been doing a lot to avoid price discovery. of what these companies that they bought in 21 and 22 when interest rates were a hell of a lot lower and stimmy cash was bouncing around the economy like a pinball. Now those companies clearly not worth anywhere near as much as they were hoping. And you've got Yale selling billions of dollars because, well, President Trump is targeting Ivy League universities over DEI policies that they say are discriminatory, and so they're withholding federal grants. They're also attacking the tax-exempt status of these universities that are basically just giant freaking hedge funds with a college attached. And if they're forced to sell their private equity holdings, well, Harvard can't be that far behind. Princeton can't be that far behind. That's an awful lot of selling into a very illiquid market that has been tap dancing through a minefield to avoid finding out what these things are really worth. That could cause big problems for private equity firms. Keep an eye on that going on this morning, guys. We got a lot to get to. Why don't we shrink my big melon of a head? Let's see what's happening in these markets. Don't forget that like button and that subscribe button. And I would be remiss if I didn't mention today's show will be available on Spotify as well. So if you guys like to listen to Spotify while you're driving, Nobody Special will be available on that format as well. Check us out over there. Right now, the S&P 500 is down 55 points, about 1.1% lower ahead of the opening bell. Stocks are selling off a little bit despite that weaker dollar, which should be putting a little upward pressure on stocks, but this is people selling U.S. stocks to get dollars. Then they're selling those dollars to get euros and to get yen or to buy gold or even Bitcoin this morning. So the S&P is lower here. The Dow is off by 339 points, 0.87% lower as well. And the NASDAQ is leading the way down here, 1.7% lower, off by 316 points. This is risk off across the board here. Now, looking at foreign stocks this morning, we've got the German index down about 0.5% as well. The British FTSE is actually just barely positive, essentially unchanged. The CAC 40 down by 0.6% over in France. The Spanish index is unchanged here. Let's scroll a little bit down, see what's going on in Asia. The Nikkei down 1.3% last night. So we've got some Japanese stocks selling off on a little bit of that yen. I don't want to say panic yet. It's not yet a panic back into the yen, but we are seeing Japanese stocks sell off along with it. And Chinese stocks are doing their fake tap dance as usual, up a fraction of a percent because the Chinese government basically said you're not allowed to sell stocks, and they're buying their own stock market to try to appear stronger than they really are. Now, here's the big story this morning, guys. The DXY. Look at this thing. 120 basis points lower, down to 98.19. We have got a much weaker dollar this morning. Now, there's some key dates I want to talk about. Let's zoom out a little bit. Let's look at the DXY chart. These are now daily candles. We're going back to about August of last year here, and I have a couple of dates circled. And these are important dates. The first one I've got circled here is Monday, January 13th. That was the peak in the DXY. Monday, January 13th, that was the day the Biden administration put their AI diffusion rule into effect. That's basically, you could argue that was the first salvo of this trade war, and it was a week before Trump even took office. That was the peak in the Dixie. As soon as they said, okay, we have this new tier system, you're not allowed to sell chips at all to tier 3 countries. Tier 2 countries can only buy so many. And tier 1 countries, which is basically like the U.S. and a few of our allies, are the only ones you can sell unlimited to. That day was the top in the DXY. That was also the day insurance companies started targeting Russian shadow fleet tankers. So you could see there was some shots being fired in the trade war on that day, and the dollar has weakened ever since. And it hasn't turned back. That's when it started. Now, the next significant date is February 28th. That was a big one. That was that big blow up between Trump and Vance and Zelensky in the Oval Office. That's when the reality that Europe was going to have to pay for its own defense began to set in across the continent. And of course, that started the flow of money back into Europe, and the dollar weakened sharply on that news. The next significant day was April 2nd. Obviously, that was Liberation Day. Do you feel liberated? I don't know, but that obviously a big day for the dollar. It weakened significantly. And then a few days later, April 10th was actually the biggest move in the Dixie. That was the day the bond market freaked out. That was the day Trump blinked in the trade war when he said, okay, you know what, 10% for everybody. We're going to back off on the reciprocal tariffs a little bit so we can make these big, beautiful, wonderful deals. That was the day the bond market bent the world into submission. And that was when the dollar weakened significantly. So look, these 4 dates I zero in on goes to show you guys, yes, this is de-dollarization. These are all breakdowns in the global order. The current system of trade is dying. We don't know what's replacing it, but the dollar has suffered pretty much every day since. Now, going on this morning, we have got the yen is sharply stronger here. USD JPY 140.87, sharply lower here. Almost a new low for this year here. The low that we hit was on Monday, September 16th, and there wasn't really anything that significant that day. That was the low, and the yen started to weaken after that. Remember, this chart moving lower. That is a strengthening yen here. But we are well below the August 5th levels here now. I mean, we closed on August 5th at around 144, so we're sharply below that here. The yen is showing no signs of slowing down, and the Bank of Japan is saying, essentially, we don't care. This one from the BOJ this morning. BOJ sees little need to change basic rate hike stance. The Bank of Japan officials see little need to change their existing stance on gradually raising interest rates for now, despite uncertainty stemming from U.S. tariffs. According to people familiar with the matter, the BOJ officials see the Trump administration's tariff campaign and retaliatory actions against the U.S. as likely to weaken Japan's economy and may delay progress towards the bank's price target, the people said. But for now, their overall economic projections remain largely intact as they wait for more data to analyze the impact of U.S. tariffs. With a wide range of possible scenarios for the economy, the officials' view is that it's still too early to incorporate them into their base case and make drastic changes in terms of the bank's policy stance. All right, so that's a lot of central bank speak. What are they saying? The BOJ is saying tariffs made a mess of things. We're not changing any of our plans yet. Now, they probably will, all right, because the BOJ is expected to continue raising interest rates. Continuing to raise interest rates will accelerate the decline in that USD JPY chart. It will cause the yen to strengthen further, which is a big risk to the Japanese banking system because of that unwind of the yen carry trade. But for now, the BOJ is saying no change. So that could be contributing to this lower USD JPY chart, to this stronger yen this morning. We've also got a sharply stronger euro this morning. This has nothing to do with the BOJ. USD EUR is at 0.867 euros. The euro is also strengthening against the dollar. People are leaving the dollar and they're going back to the yen and they're going back to the euro. They're also going back to gold this morning. Look, I'm sorry, this is the bond market. We are not on to gold yet. The bond market, we have got higher yields on the long end, higher yields on the short end, and actually a little bit of red in the middle. That's peculiar. But the long end is the one you really got to watch these days, guys. The 30-year Treasury higher by 7 basis points, 4.880. The 10-year yield is at 4.381. That's higher by 5.5 basis points. Meanwhile, the 2 years actually lower by 3 basis points at 3.764. And the 1 month is higher at 4.316. That's up by about 2 points and change. So the long end of the yield curve, those yields are heading higher here. That is bond prices heading lower. People are selling their U.S. treasuries for dollars, trading those dollars for euros, yen, gold, and Bitcoin. And that is causing some anxiety in stocks as well. Looking over at the commodities board, gold. Good God, look at gold go here. Spot gold, $3,416, up $88.82, 2.67% higher. We've got the June gold futures are trading at $34.27, higher by almost $100. This is what, the fourth day in a week or so where gold is up almost $100 here. Gold is telling us there are big problems, guys. And look, even silver's getting in on the move here. Silver is higher by about 1.1%, $32.95. That's up by about 36 cents. But gold is making the much bigger move here. That means the gold to silver ratio is going even higher. I believe it's about 103 now. Precious metals are screaming something bad is coming, guys. Watch out here. And by the way, silver just looks absolutely delicious at these levels with this big move in gold and silver lagging so far behind. Historically, that has been followed by a very big rally in silver prices whenever the gold to silver ratio gets this distorted. Copper, meanwhile, a little bit higher by 1.1% here at $4.79 for May copper futures. Platinum's down about 0.38%. Palladium is down 2.1%. Oil selling off a little bit here, $62.39. That's off by $1.62 for June WTI futures, or about $2.50 lower. Now, check out this one here. This is the what President Trump tweeted out yesterday. The golden rule of negotiating and success. He who has the gold makes the rules. Thank you. Well, you're welcome, President Trump. Guys, what is he saying here? Okay, I get it. Yeah, he who has the gold, right? Gold is money. Everything else is debt. You know, that JP Morgan phrase. Okay, I get that. But who's he talking to? Is this another case of this is a great time to buy, like he did on April 10th, when, you know, he tweets out it's a great time to buy, and then he backs off on the tariffs a few minutes later and the stock market rips? Is that what Trump is saying? Is he telling us to buy gold here? Or is this maybe a little bit more posturing and, you know, chest thumping towards the Chinese? Or, oh, we've got all the gold. You have none of the cards. We hold the cards. Sir, we're playing Uno. Anyway, I don't really know what he's saying here. By the way, anybody remember Fort Knox? Anybody remember the revaluation of gold? Those were two very big things not too long ago. Maybe he could be hinting at one of those. Honestly, I have no idea specifically what he's getting at here. All I know is gold is ripping, and this has to be playing a role. But you guys let me know. What is he really talking about here? Let me know in the comments, because I don't know. What I do know is gold is heading a lot higher. Look at this chart, guys. Look at all of these big green candles. These are pretty much $100 moves in gold on almost like thrice weekly basis. We're seeing these big moves in gold here. Again, this is not orderly. This is not like stackers being rewarded for their patience. This is panic that we're seeing in gold markets here. It just keeps ripping. I don't know. I mean, look, I own gold. I'm happy to see it. But I want to see gold go up slow and steady. I don't want to see gold go vertical, because that's when really bad things happen elsewhere. And that tends to be more expensive for me in other areas of my life versus the capital gains I might be seeing from the gold. Anyway, that's happening. Now, Bitcoin, guys. Why is Bitcoin rising this morning? $87,140 is priced in Coinbase. It's up by almost $2,000 from yesterday. Now, it's off its highs. It was up around 87. It hit a high of 87.8 today. Bitcoin should be selling off here if we're just going by risk off, right? Today's a risk off day. Bitcoin should be deeply red, but it's not. It's deeply green. That means as people are leaving the dollar and running to safety, some of them are buying Bitcoin. I don't know how many of them. I don't know who it is. Is it banks? Is it central banks maybe? All I can tell you is the flight from the dollar, the beneficiaries this morning, it's not stocks, it's not bonds, it's euros, yen, gold, and Bitcoin. So Bitcoin is behaving like a reserve asset today. That's interesting. That's new. We have not historically seen this. Bitcoin has been tied and pretty strongly correlated to the NASDAQ, and it's not doing that this morning. Pay attention to that one, guys. I don't know. Maybe this is a one-off and it's going to reverse. But if that continues, that is majorly bullish for Bitcoin. Meanwhile, China vows retaliation against countries that follow U.S. calls to isolate Beijing. So this is we're getting into this kind of like the ultimatum game, if you will. You're either for us or against us kind of thing. China on Monday warned it will retaliate against countries that cooperate with the U.S. in ways that compromise Beijing's interests, as the trade war between the world's two largest economies threatens to embroil other nations. China's warning comes as U.S. President Trump's administration is reportedly planning to use tariff negotiations to pressure U.S. partners to limit their dealings with China. Trump this month paused major tariff increases on other countries for 90 days while hiking duties further on goods from China to 145%. China firmly opposes any party reaching a deal at the expense of China's interest. If this happens, China will not accept it and will resolutely take reciprocal countermeasures, the Chinese Ministry of Commerce said, according to a CNBC translation. So I guess if you cut a deal over the retaliatory tariffs with the U.S., there could be retaliatory tariffs from the Chinese to go along with the American retaliatory tariffs. Everybody retaliates. Everybody gets tariffed. One thing is for sure, globalism is dying. All right. I don't know who's going to win. Nobody really wins. To be honest with you, I don't even really think this trade war is between the United States and China. I think this trade war is actually between American employees and American companies. That's just my hot take on what's really going on here. It's amazing the lengths American companies will go to avoid hiring Americans. But you've also got this China-Taiwan thing that's going on. That is a parallel fight in this trade war. And I guess, hey, if it hurts Chinese manufacturing, the Trump administration views it as bullish for American manufacturing. And China sees it, and they're trying to get out in front of it, saying anybody who cuts a deal like that will suffer the consequences. See how that one works. Also going on in China this morning, Huawei readies their new AI chip for mass shipment as China seeks NVIDIA alternatives. Huawei Technologies plans to begin mass shipments of its advanced 910C artificial intelligence chip to Chinese customers as early as next month. Two people familiar with the matter said some shipments have already been made. The timing is fortuitous for Chinese AI companies, which have been left scrambling for domestic alternatives to the H20, the primary AI chip that NVIDIA had until recently been allowed to sell freely into the Chinese market. This month, U.S. President Trump's administration told NVIDIA that sales of the H20 would require an export license, basically banning the H20 to China. Huawei's 910C, a graphics processing unit, represents an architectural evolution rather than a technological breakthrough, according to one of the two people and a third source familiar with the design. Okay, so these are Huawei people when they say, oh, an architectural evolution or revolution. Yeah, okay, the demand is insane. All that silly stuff that Silicon Valley says. Look, NVIDIA is losing Chinese market share here. Their neutered chip, the H20, is now illegal. Huawei is putting out a product to counter that. NVIDIA's got some big problems here, and the stock is down this morning 2.7%, $98.75 for NVIDIA, back below $100. Look, you can add this to the accounting fraud. You can add this to the export control violations. You can add this to the DOJ investigation, the Congressional Committee investigation. I tell you, I was talking to some people last night about NVIDIA. You would be amazed at the mental gymnastics that the NVIDIA bros will go to in order to act like this is all just a misunderstanding and demand is really insane. These guys will be insisting that this company is going to be worth $2 quadrillion right up until the windbreakers raid NVIDIA's office and start carrying boxes out. It's amazing what these people will say. Also going on this morning, another exclusive from Reuters here, Tesla to delay U.S. launch of affordable EV, a lower-cost Model Y, sources say. Problems at Tesla, of which there are many. Tesla's long-awaited plans for an affordable car include a U.S.-made, stripped-down version of its best-selling electric SUV, the Model Y, but the production launch has been delayed, three sources with knowledge of the matter told Reuters. By the way, finally, somebody is making a stripped-down version of a car without the damn bells and whistles. Like, where are the American car makers? All they're doing is making more and more complex vehicles, pricing more people out of new cars. Tesla was supposedly going to make a cheap car, but now they're not, at least not for a little while. Tesla has promised affordable vehicles beginning in the first half of the year, providing a potential boost to flagging sales. Global production of the lower-cost Model Y, internally codenamed E41, is expected to begin in the United States, the sources said. That would occur at least a few months later than outlined in Tesla's public plan, they added, offering a range of revised targets from the third quarter to early next year. The reason for the delay was not clear. Two of the people said Tesla aimed to produce 250,000 of these cheaper Model Ys in the U.S. in 2026. The new vehicle is also planned for eventual production in China and Europe. Good luck with that, Reuters has previously reported. The delay of U.S. production and the U.S. production target have not been previously reported. Tesla reports results on Tuesday, and plans for the new vehicles are a major question. So we will almost certainly hear more about this tomorrow after Tesla reports. I'm sure the press will be asking questions about it. Curious to see what the company comes back with. If I had to put my finger on it and come up with a guess, I'd say it's probably parts sourced in other countries subject to retaliatory tariffs. That is the delay. I don't know that. I'm just speculating here, but nothing is purely made in America anymore. These parts come from all over the world. And, well, global trade, you may have noticed, kind of a thing lately. Tesla stock down 4.5% today. The opening bell has rung $230, $229.57. Tesla stock has fallen here, down $11 and change, almost 5% lower. And the last one of the day, guys, Yale sells up to $6 billion of private equity portfolio amid federal funding challenge. So price discovery may be coming to the PE market. Look out. Yale University is offloading a massive private equity portfolio amid mounting pressure from federal funding cuts enacted by President Trump's administration. The university is selling a multi-billion-dollar portfolio in the secondaries market, 4 sources told Secondaries Investor. The transaction could go up to $6 billion in size, according to the 3 sources. Yale University pioneered the endowment model, which emphasizes diversified investments with a significant allocation to alternative assets, particularly private equity, as a key driver of returns. The university is the 27th largest PE investor in the world, with over $20 billion invested in the asset class, according to affiliate titled Private Equity International's Global Investor 150 2024 ranking. Oh my God, that's a long title. This is Yale's first known sale in the secondaries market, 2 sources told Secondaries Investors. The move comes as Yale and other Ivy League schools face growing pressure from the Trump administration's threat to limit federal funding and revoke the tax-exempt status of top U.S. universities. Earlier this week, the administration froze $2.2 billion in grants to Harvard and signaled plans to challenge its tax-exempt status, which allows institutions to avoid paying federal income taxes on their endowments. Despite the funding and tax challenges, Yale has attributed the sale to its portfolio management needs, according to a source. The quality of assets involved in the transaction is mixed, the sources added. Evercore is advising Yale's secondary sale. Yale is entering the secondaries market at a turbulent time. The bid-ask spread is expected to widen as investors factor in valuation uncertainty driven by the tariffs, multiple market participants told Secondaries Investors in the week following Trump's Liberation Day announcement. Some are even closely monitoring conditions for repricing opportunities. All right, let me just say this last paragraph has some very important stuff here. All right. The turbulent time. All right. They're trying to make this out like, oh, it's just a Trump story. And to a certain extent, it is. All right. Trump is going after the tax exempt status. He's cutting funding to these universities. So the sudden need for cash is very much a Trump story. However, this thing that they're saying here, the bid-ask spread expected to widen, that is not a Trump story. A big spread between bid and ask is the hallmark of a very illiquid market. When what people are willing to pay versus what people are asking, when that gap grows, that means there are not enough people playing in the pool, and they're having a hard time figuring out where the price actually is. And that is a big red flag for private equity. That is not a new phenomenon. That's been going on for a while. Private equity firms have been doing this net asset value financing, creating these new funds made up of investments in the old funds, and they're using that cash raised in order to pay out fake profits to the investors in the old fund, the Ponzi-like behavior. All that's going on here is Trump's attack on these universities is exposing a pre-existing problem in the private equity market, kind of like Trump's attack in global trade is exposing pre-existing weaknesses in the bond market. Now, Trump is almost certainly going to get the blame for all this, and he deserves some of it because he's the pin that pops these bubbles. But guys, these are major underlying weaknesses in the economy that have been there all along, and all it took was a little nudge for this to start. And watch out, man, because I tell you, these private equity firms, first of all, I will shed no tears for private equity firms because these guys are corporate raiders. They are locusts, buzzards, strip miners, whatever analogy you want to use. These people are the parasites of finance. And, them losing money just doesn't really bother me that much. The only thing, it's unfortunate because people's pension funds are invested in this garbage and they are going to suffer as a result of it. But these guys have been doing everything in their power to avoid finding out what the companies they hold are worth. And if universities start selling in the billions, they're going to find out really fast that they're not worth anywhere near what they've been claiming. And I just want to say thank you very much to Mr. Steve Woitis, who says TFH, is the drop in the Dixie a signal of an impending May rate cut? No, I don't think so. I don't think the Fed cuts in May unless we go back to like an April 10th panic in the bond market, which, hey, it was only 11 days ago. So maybe that happens. It's not terribly unlikely. But that being said, absent a violent move in the bond market or another violent move in the bond market, I just don't think the Fed cuts here. Look, guys, the Fed is owned by globalists. The Fed is run by globalists, right? The Federal Reserve is owned by its member banks, and its member banks are owned by globalists. So the Federal Reserve doesn't want Trump to get its way here or get his way. It just doesn't. The Federal Reserve wants this trade war to go away so they can go back to getting incredibly rich off of monetary debasement and the destruction of the American middle class. That's what the Federal Reserve wants, or at least the puppeteers who control Jerome Powell's strings. That's what they want. So they're not going to do anything that is going to help Trump win this trade war. And again, what does win this trade war look like? It doesn't look like some great victory over China. Win the trade war means American companies building factories in America and hiring Americans. And again, the globalists that control the Federal Reserve, Wall Street doesn't want that. They want the cheap labor overseas. They want the sweatshops because they get rich off of it. So I really don't think the Fed is going to do anything that might minimize the pain from this trade war, because that will be seen as allying with Trump. They don't want to do that. But if the pain gets so bad, they might step in. There's a game of chicken going on between the Treasury and the Fed right now. And on April 10th, the Fed won because Treasury blinked. That's why Wall Street likes Scott Bessent so much, by the way. Thank you very much, Steve Woitas, for supporting the channel. And GNU Engineering says, I've missed you all. Keep up the good work for us. Well, thank you so much to my fellow engineer. I appreciate that very much. Also, thank you so much for being a Melonhead member for 11 months, coming up on your birthday, your Melonhead birthday. Thanks again for supporting the channel. Nashville Pasta Man says, drink more Ovaltine, according to the Trump decoder. Oh, is that you? You found the code hidden in that tweet about gold. Be sure to drink your Ovaltine. Wait, Christmas Story. Thank you. Took me a minute to get that. I had the scene playing out in my head, just couldn't get the title of the movie. A fellow student of cinema, the Pasta Man. Yeah, man, guys, let me know. What do you think Trump is really saying with that Truth Social post about gold? I have like 5 or 6 different ideas in my head, and I just don't know which one it is. Thank you very much, Pasta Man, for supporting the channel. Armando Reyes says, what's worse? Do we just keep reviving the dollar, or do we get it over with and roll out a CBDC and UBI? Ooh, CBDC and UBI. I mean, talk about totalitarianism. I mean, and we were heading down that way big time in the earlier part of this decade. The globalists and the totalitarianism, I mean, we were zipping down that slippery slope to totalitarianism. Right now, we are moving away from those things. Let's keep moving away from those things. CBDCs, no thank you. UBI, no thank you. Yeah, by the way, UBI, Universal Basic Income, that's just basically paying everybody to do nothing. A government that gives everybody everything can absolutely control everybody by taking it away. No thank you. That's why governments want to destroy the middle class, because the middle class doesn't really want anything. The middle class wants to go to work, come home, play with the kids, go to bed, rinse, repeat. That's it. They don't want anything. They don't want government handouts. They're not trying to conquer the world and gain market share. They just want to live their lives and be left alone. And people who don't want anything are pretty hard to control. And so you have to destroy the middle class if you want to take control. And things like central bank digital currency, programmable money, universal basic income, that is totalitarian control incarnate. Thank you, Armando Reyes, for supporting the channel. Dan Hadeen says, good morning, Melonheads. Jack, I got an email this morning for one of the Pay Now services. They're now giving you 2 skip payments per transaction. 2 skip payments. Is this like the buy now, pay later services we're talking about here, Dan? That's interesting. Do me a favor, Dan. If you don't mind, could you take a screenshot of that and email it to me, or forward it to me? Don't send me any like personal information that's going to compromise your data security. But I'm really curious who that is and what the specifics of that are. Is this buy now, pay later saying buy now, pay laterer? Which means, are they starting to have some credit risk there? That's all right. Interesting anecdata, Dan. Thank you so much for sharing that. And I look forward to reading more about that one. Everybody else, thank you so much for having your coffee with the Melonheads this morning. Watch that declining dollar. Keep an eye on Bitcoin and its behavior during risk-off moves in the market. And, of course, enjoy the new all-time high in gold. Thank you so much, everybody, for the super chats. And thank you to my magnanimous Melonheads on YouTube and Patreon for supporting the channel. Links down below to all that good stuff. Don't forget to check us out on Spotify. Hi, Mom. Hi, Dad. I love you guys. Everybody, till next time, live small and dream big.